Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Checking in on the tech sector, XLK, Apple, and Facebook. So the XLK bulls out in force. We needed them to prove it to us. We have our double low at 52.33, the must-hold level. We rejected from the middle Bollinger Band resistance yesterday, blew right through it today, strong close, and we're now looking back up at the recent high. So the tech sector has done the best job of holding on out of the lead sectors. We saw the financial sector pull back a lot more significantly, and the tech sector was really the saving grace for the S&P 500, staying strong and keeping it really strong as well. And that double bottom is now the level that is tattooed on your forehead. And we have the increasing bull volume, the strong close, and we're looking up at the all-time high here, 53.71. That's the real only resistance level that we have left from here. We saw a bunch of tech strength today in Facebook, Apple, Google, a lot of individual names, and it's very clear that the tech sector strength is directly correlated to the S&P 500 strength. And as long as the tech sector keeps seeing money pour into it, the S&P 500 is going to be just fine. So the weekly time frame, we did close just below those exponential moving averages last week. We closed down at the low of the week. It looked like we had a lot of momentum to the downside. Bulls came out swinging to start this week, and we have a nice strong candlestick, keeping everything in control and potentially even fending off this bearish MACD cross. If we see follow through next week to the upside as well, we will fend this off and we'll see them trade horizontally next to each other, overlapping, and the bulls are strong. So 52.33 must break in order for the bears to see any kind of significant move to the downside. At this point, it is still a potential bull flag of consolidation, just a few weeks, nice and contained, and looking for continuation to the upside. It's entirely possible. If we do see the tech sector do that and hit new highs, we're going to have the S&P 500 right under its all-time highs as well. So Apple had been struggling. Apple had a very tight 4-day range, and it made a bear break yesterday on a little increase in bear volume. So we've been watching these exponential resistances drive the price to the downside. Certainly not an all-out dump or anything like that. If you look at the daily time frame, you can see we are still forming higher lows. Every time we form a dip with a long lower wick that sticks out of this pattern here, it's a higher low. So those were all remaining intact. And we had one here at 140.06, traded sideways, and now the bulls are trying to show back up. So the higher low pattern is very clearly still intact, and the middle Bollinger Band is resistance. So that acted as support a couple times on the way to the upside, and now it's acting as resistance, 142.56. So the bulls need to close over that level to get back up, looking towards our all-time high. We can pick out resistance levels, all of these high of the days where we were pulling back from, 143.35, 143.88, 144.18, so on and so forth. So there's no shortage of resistance levels to be keeping an eye on, but we don't have too many of them until that all-time high of 145.46. So as of right now, the must-hold level for the bulls is 140.06, and even seeing weakness, I think I said in the last video, it's been pretty prolonged in terms of 2 or 3 weeks to the downside, but in the grand scheme of things, where we are coming from, this is very minimal consolidation, and you see it on the weekly time frame. We haven't even touched the 8-period exponential in months, and we're still above that level. So we closed below the 4-period last week, but no bearish MACD cross, no bearish TCG cross. Bulls remaining in control. It's going to require a break of the higher low pattern in order for there to be any kind of weakness on the weekly time frame. Facebook blue sky breakout bull. We saw that strength yesterday. We rejected from the upper Bollinger Band and we pulled back, but we saw a strong open today, and we opened right at the high of yesterday. So we knew that was the only resistance we had until the all-time high. So as soon as that high of yesterday did break with that strong open, as soon as we broke 143.04, we were then instantly looking at that all-time high. We had a double top at that level to the penny earlier in the trading day, and then the bulls blew right through it. As soon as the S&P 500 kicked it into high gear, the blue sky bull, with no resistance levels in history at these levels, certainly responded really well. Little uptick in bull volume on the verge of a bullish MACD cross, close above the upper Bollinger Band of 143.56. Update that upper Bollinger Band at the open. If the bulls can close above it again to end the week, we will have a lot of strength heading into next week. Weekly time frame bull flag pattern here, just a very brief consolidation, decreasing volume. Granted, that was a holiday week and missing one day, but still very healthy. holding exponential support, nowhere near a bearish MACD cross, and now we have our continuation part of that bull flag pattern, and we're looking up at psychological resistance level. So the all-time high is 144.25. We'll look at 145, 146, and we'll see how long the bulls can run with it here. So I appreciate you watching. Tech sector is the lead sector in terms of strength, in my opinion, in the S&P 500, continuing to drive the price to the upside. And these bulls, these individual bulls, are benefiting. Thanks again. We'll see you over the weekend.